Hey everybody, welcome back to another live market update from the team here at tradinganడింvesting4u.com. Once again, just before we get started, I have to make it clear this is general advice only. No specific needs of the investor were taken into account when we made this. Let's get into it. Today, what we're going to be talking about is Europe again. Unfortunately, things are spiraling out of control. New information, new worrisome facts are coming out, so I want to touch on that a little bit. But we're also going to have a look at Mickey D's and see how McDonald's is going in this difficult financial time as well. But before we get into that, once again, if you're watching this on YouTube, please take advantage of some of our free education. Most importantly, please check out our blog. We're going to have a very in-depth article up there about what I'm about to go into. You'll obviously see the blog post there. On the right-hand side, we have our 3-step simple system to finding amazing entry points. This video is from our professional trader, John Howe. Excellent free education there. Now let's move on. The markets. Well, what happened last night? No secret, it got hammered. US, let's have a look. The S&P 500, the Nasdaq, and the Dow all finished lower. The Dow opened, promptly fell straight off a cliff, before strengthening a little bit to finish 100 points lower. The S&P 500 finished 0.89% down and the Nasdaq 1.2% lower. Why did this happen? No secret, Europe again. Spain's borrowing rates are now at official record level, 7.565%. Now the level that is believed to be unsustainable is 7%, so we're well above that, and investors are pretty much convinced now that Spain cannot continue going on at this level. And as they're not going to be able to borrow these rates, it basically forces them to take a sovereign bailout, similar to what Greece did. And of course, when we have a sovereign bailout, we always have the terms and conditions that go with that sovereign bailout. And I think this is what investors are worried about. Let's have a look at Greece this week. Obviously, they're meeting with their creditors, and it does look like they're going to be able to pay. If they can't pay, they're not going to get more money. They might get kicked out of the euro. Investors are worried, I think, that Spain is going down this same avenue. They're not going to be able to keep borrowing at these rates. They're going to have to go for a bailout. The other thing that's happening in Spain is the regional governments. So we had Valencia on Friday. They came out requesting a bailout from the Spanish central government, and we have 6 other regional governments lining up, it looks like, as well, for more bailout cash. Spain is obviously not going to be able to come up with all this money. It's going to push them obviously forward even more to getting this sovereign bailout. Now the Spanish economy minister came out and he said no, they're not going to need a full-blown bailout, but investors, I don't think, are believing this, and I think that was seen in the markets last night. I think Spain lost another 4% or something last night after a 5.5% or 6% loss on Friday. So obviously Europe and Spain is worrying investors quite a lot. And if you add to Spain what Moody's did yesterday, I think we can see why. I mean, Moody's came out and they basically lowered Germany's prized AAA credit rating. And they moved it from being stable to being negative. Now Germany is basically the strengthening pillar in this self-destructive Europe right now. They were really seen as the stalwart. And if they continue to go down, their economy's already seen to be slowing. Moody's seen this, and they've just lowered their credit rating. But if they go down, things could get particularly ugly, even more so now, even more so than now, which is kind of hard to imagine. So Moody's did this for a couple of reasons. Number one, obviously, the German banks. The German banks have a significant exposure to Greek debt. If Greek does have to default, this is obviously going to affect Germany quite badly. And the other reason, obviously, is a lot of the bailout money that's coming out for Spain and Greece is coming from Germany. And this is obviously going to have a detrimental effect on the German economy if more money has to come out now to bail out Spain. So these two factors are basically why things got hammered last night. Now, the next thing I want to look at, just for something a little bit different, is Mickey D's. So McDonald's came out yesterday and they had their earnings result. It was worse than expected. I think McDonald's took about a 3% hit, or maybe just a bit under, on their stock price last night. And it basically came down to a couple of factors. Number one, people are not eating out as much. Consumer confidence, consumer spending is at an all-time low globally, and this is obviously hurting McDonald's bottom line quite a lot. But also, and I touched on this yesterday, are food prices. We have the big drought in the Midwest of America. That's really affecting the price of food. It's pushing things up quite a lot. And analysts believe that inflation for food is going to be up in the high single digits for at least the next couple of quarters anyway. So rising food costs are going to obviously keep people away from restaurants. They're going to be eating home more, and chains like Mickey D's and others are looking like they're going to suffer for the next quarter at least, unfortunately. Not really a lot of good news coming out today, guys, is there? So I guess over the next week or so we're going to see what's going to happen with Greece. We're going to see what's going to happen with Spain in terms of this sovereign bailout that potentially will need to happen. All of this, depending on how it goes, is going to either have a detrimental effect on the markets, or we might see a bit of a raise if Greece can come up with the money and Spain can somehow find some cash from somewhere to push it in the right direction. My money is that we're going to have some more downside. Let's wait and see what happens. Anyway, thanks for checking in today, guys, and hopefully I will have a chance to speak to you again tomorrow. Once again, if you're on YouTube, please take advantage of our free education. Otherwise, we'll catch you tomorrow.